Ton of things we want to talk about today. So kicking it off, we're going to talk about EVs again. You know, the markets have been struggling recently, and some of your favorite EV stocks have actually shown some very impressive resilience in the sell-off. One of that comes to mind is Rivian. Can you explain why these EV stocks are outperforming in the ugly tape? And, you know, is it going to continue?
Sure, Aaron. Yeah, so the whole energy trade has continued to be very strong, relatively speaking. Everything from natural gas, oil, uranium, clean tech, solar, energy storage, electric vehicles. And I think the whole clean energy side of that, a big driver of the alpha is the fact that, remember in early 2022, there was this huge thing about higher gas costs are going to push people into electric vehicles because driving a gas car becomes more expensive. But then the flip side of that coin was, well, the Russian invasion of Ukraine caused critical battery metal prices to go significantly higher. Cobalt, nickel, lithium, the prices of those metals soared in the aftermath of the Russian invasion of Ukraine. So it's kind of like, yes, gas prices are higher, but electric vehicle costs are also higher. And you saw a subsequent round of price hikes from Rivian, from Lucid, from Tesla on their entry model electric vehicles, and even on the more premium model electric vehicles too. So, you know, you got that gas cost driver, but it was unable to realize its full potential because of the rising cost of electric vehicles. And yet still, despite the rising cost of electric vehicles, EV sales are up something like 50, 55, 60% year over year, year to date in 2022. So even with that big rise in battery metal costs, you still saw robust adoption of electric vehicles this year. Now, all of a sudden, those rising battery metal costs are becoming falling battery metal costs. Cobalt, for example, those prices have retreated back to their 5-year average. Nickel, the price of nickel has retreated back to its 5-year average. Lithium still above its 5-year average. But across the board, you're seeing industrial metal prices come back to their long-term average, come back to where they were before the Russian invasion of Ukraine and before the pandemic. So you're seeing this big retreat in battery metal prices. But you're also seeing, I mean, oil has come down, but it's still 86, 87, and gas is still relatively expensive. So you still have that tailwind, plus the headwind that was there of rising battery cost is now turning into a tailwind of falling battery costs. So what was a series of price hikes across the electric vehicle spectrum in 2022, I think could become a series of price reductions across the electric vehicle spectrum in 2023. Price reductions on top of the already robust momentum you're seeing in the electric vehicle space sets the stage for EVs to have an even better 2023 than they did in 2022. And that's great timing for a stock like Rivian, for a stock like Lucid, because 2022, they weren't really going to ever produce that many cars. They're just getting started. 23, they're going to start ramping a little bit more. 24, ramping a lot more. 25, ramping significantly. So, like, they're in the early innings of a ramp. If all of a sudden the macro backdrop shifts more in favor of them as they accelerate on this ramp, that's going to really, really help their sales and really, really help their margins. And that is a situation where I think electric vehicle stocks like Rivian, like Lucid, can do really well over the next 12 months. So I think excitement about that is what is allowing Rivian, for example, to perform much better than the broader markets in the current environment. So I think that explains why they're outperforming, and it also explains why that outperformance should persist for the next 6 to 12 months. We're still very bullish on Rivian, still very bullish on Lucid. I think the whole EV space has a lot of upside over the next 12 months.
So everything you said makes total sense as to why that sector is performing well right now. But again, when you look at the market as a whole, can you kind of go into a little bit more as why it's resilient against what we're seeing in the trends in the market right now?
So yeah, I mean, like I said, the trends in the market right now are that inflation is a problem. The Fed's going to kill it, and we're worried about what type of damage is going to be done in the Fed killing inflation. I think the market's moved past fears of inflation. I think they're pretty convinced that the Fed's going to shoot it and kill it. And now
Mhm.
the concern is, okay, in shooting inflation, it's a shotgun basically. So there's going to be collateral damage. How big is that collateral damage going to be?
Mhm.
And so that's where the fears are. And I think the strength in electric vehicle stocks is emphasized by this idea that even if the Fed slows the economy meaningfully, there is
Mhm.
still going to be strong demand for electric vehicles in 2022, 2023, driven by a shift in consumer preference, driven by the fact that auto purchases, yes, they are cyclical, but people still need cars, and driven by the whole climate bill that introduces a new tax credit for used electric vehicles, extends tax credits for another 10 years on electric vehicles, removes the cap for big auto producers like Tesla. So I think that there's a lot of belief and momentum around the belief that the electric vehicle space is due for resilient growth over the next 12 months, even if the economy
Mhm.
gets very wobbly.
Thanks for watching HGI Clips. For the full episode, head on over to our sister channel at Hypergrowth Investing by clicking the link in the description or listen to the podcast on any of your favorite streaming platforms. We make new episodes every Wednesday, so make sure to check it out and subscribe to never miss any of Luke's Hypergrowth insights.